Beacon Energy has returned to the AIM market after its suspension, having completed the acquisition of German oil and gas company Rhein Petroleum. Larry Bottomley is chief executive. He joins us now here in the studio. Larry, welcome.
Thank you, Jeremy.
It's a good little story, this. We'll get on to Germany in just a minute, because oil and gas in Germany doesn't seem to be something that many people talk about. I want to go first of all with a look at this reverse takeover, from which I note that the company banked £6 million. Give us some more depth and breadth about what it is the company's trying to achieve here.
Okay, so about this time last year, essentially the precursor to Beacon Energy was a cash shell. What we aimed as a board to do with that cash shell was to reverse in assets, and we set out with the vision of building a self-funding oil and gas E&P business. And so during the course of last year, we went through and screened assets and companies and various parts that had the capacity, had the components that would allow us to build that self-funding business. We alighted on Rhein Petroleum, and now we've been successful at securing Rhein Petroleum. And Rhein Petroleum is principally an operating company based onshore Germany, and it has production, albeit small. It has development opportunities, which is where we see the opportunity of growing organically within the company. And it's also got some exploration assets which have the capacity, the capability of being absolutely transformational to a company of Beacon size. So the £6 million raise for us is to undertake the development program that will create that self-funding business model.
Just another point on the assets. Explain more about the geography of where it is and the neighbours and so forth, and the other companies that are in the area, because, as I said, Germany is not something that rolls off the tongue when you're talking about the oil markets.
Yeah. Well, Germany has a number of sedimentary basins that produce oil and gas. The current production is the region of 120,000 barrels a day of oil equivalent from those basins. The specific basin that Rhein Petroleum in is the Rheingraben, hence the name. And the Rheingraben is where the Rhine Valley runs, and it essentially runs from Frankfurt to the French border, and the bulk of Rhein Petroleum's assets sit within that graben. And that graben has known of hydrocarbons for hundreds of years. So back in the 1600s, they used the oil that was seeping at surface for medical purposes. But in the early 50s, there were some big discoveries that were made in the basin. And from the 50s, 60s, 70s, through to the 80s and the early 90s, there was an active exploration and development and production campaign within that basin. And Rhein Petroleum has a number of those assets that are currently producing and are developable that sit within that basin. And in the country, there are names that you will know. Exxon are based there, Vermilion are there, Neptune are there. So there's a number of large companies that operate in the oil and gas E&P space within the country.
So how do these assets fit in with the company's strategy, but more so about how they fit in with your experience and the experience of the board that's been put together for Beacon?
Okay, so in terms of the assets themselves, why they have the capacity to give us a self-funding business model is that there's current production. So there are two assets that are currently producing, one of which is operated by Rhein Petroleum. That's the Airfelden field. And the Airfelden field, there's a facility that sits above it. So there's the production capability, and that current production goes off to a nearby refinery. Within that field, within the Airfelden field, there are undeveloped segments. There are two specific segments. One segment has a well that's proven hydrocarbons on it, and it's that segment that we will be developing. So the £6 million that we've raised will fund the first development well. We've contracted a rig, and that first development well, the rig will mobilise in early June, and that will spud in mid-June. So within 6 weeks, we should start the development programme on that field. And the aim is that the production that comes from that well will generate cash. The cash we will then reinvest in further development of that field, a redevelopment of another field that sits in their portfolio, and the development of a discovery that Rhein Petroleum made in 2019.
So this £6 million then, you've indicated partly what it's going to be paid for. Does it take you right through to production, or is there going to be a need for a further raise?
In terms of the £6 million, what it funds us for is the well and tying back the well. So at the moment, there's this facility, the Schwarzbach facility, that sits above the Effelden field. It has the capacity to produce manage 2,000 barrels of oil per day. Immediately adjacent to that facility is the drilling pad, about the size of a football field, and there are 3 conductor pipes that are already pile driven down to 85 meters. So that's a 20-inch conductor pipe. That's the first part of the drilling, and the production pipeline that links that is already installed, so it goes back to the facility. So in mid-June, the rig will be there. It's a 25-day well. We'll then probably spend 12 days or so testing that well, and then it will take an additional 12 days after we've de-rigged for that to be tied back into the production facility. So we're hoping within the next 3 months that we can get a significant increase in the production profile of the company.
What's it cost to get a barrel of oil out of the ground? The equivalent of, I mean, talking WTI, I've just looked up on the IG platform here, we've got a quote of just under $82 a barrel. What sort of profit are you making on that sort of dollar equivalent?
When we get to the point of getting to peak production, we're looking at a 3-well development program, 2 producers and a water injector. In the 2P reserve case, we've had an independent competent persons report that's evaluated this. The MPV of the asset is in the region of $55 million. And when it's at its peak production from those 2 producing wells and the water injector, in that 2P case, then at $85 a barrel oil, $55 is the operating margin. So these are incredibly valuable barrels, and it's because, firstly, these wells are not expensive. They are 3 to 4 million euro type wells. So the facility is immediately on top of the field. So and we can export it immediately and instantly. And then the other part is that in Germany, it's really a very simple system in that it's essentially 10% royalty that goes to the local state, and then there's a combination of taxes that make up about 30% of corporate income tax. So it's a really simple tax and royalty system, very low operating costs, very low capex. So these are very, very high margin barrels, which isn't unusual for onshore barrels.
So I'm not going to show the share price chart because you've only got a few days of performance, but you're listed on AIM. You've got a market cap of £12 million.
Yes.
What you're talking about seems like an awful lot more value than just 12 million.
Yes.
What are you saying to investors about that discount that shares are at the moment?
Well, I think the 2P reserve, so these are proven barrels that have been independently audited and allocated, 3.8 million barrels that sit within that single segment we're going to develop. And there's a second segment which we've yet to tackle, but that single development has an MPV in the region of $55 million. All companies generally trade at a discount to their MPV. Our discount is currently really very, very dramatic and very, very large. I think the important thing too is that we've got a really important trigger that's going to be happening almost immediately. Within 6 weeks, we'll be spudding this well. 2 months, 2.5 months thereafter, we'll be producing from this well. And I think there should be, that in and of itself should change the value description of Beacon on the market.
Any other assets in the region you like the look of? Is there opportunities to acquire more? I mean, I guess there's quite a lot of competition out there for any other wells, if indeed they're all as potentially successful as those you're talking about.
Yes, I think there's really the opportunity set sits within the portfolio. So there's an undeveloped discovery that Rhein Petroleum made in 2019, and we are expecting the operating plan, the approval to be able to undertake a 6-well program on top of the 1 discovery well that's already there. The 1 discovery well encountered oil in 2 reservoirs. It produced at 250 barrels a day from a short-term test from those reservoirs. So we would be looking to develop those reservoirs within that program. There's also a field that was developed between 1959 and 1962. So this was on old 2D seismic data. Rhein Petroleum went in, acquired modern 3D seismic data modern petrophysical analysis, so the electrical logs that people get from the well data, we can identify bypass pay, we can identify additional oil within those wells that hasn't been produced. So the combination of 3D seismic data and petrophysical analysis, there's an additional 5 million barrels net to the company that's associated with that. So we've got those two potential developments and then the exploration portfolio. The other part that happens in countries that have companies, and particularly large companies like Exxon, at some point these smaller basins are no longer material to them. So there's the potential for consolidation and rationalization. At this very moment, Rhein Petroleum are in negotiations on a potential development that would fall within that category. So there's the application of current technology, which shows significantly additional value in the basin. And that technology didn't exist in the 50s, 60s and 70s. And then this portfolio consolidation and rationalization. And we see ourselves as being a great candidate because of our size and our nimbleness to be able to target those types of assets.
And presumably that work that is in the future will be paid for by the production that's going to come online.
So, absolutely, yes.
So asking the question, do you have to come back to the market?
Not necessarily. The only reason we would is because we want to accelerate something. Right. So with Airfelden, it's a three well program. We'll drill this first well within 6 weeks. The production from that will pay for the second well. The production for that will pay for the third well. And when we drill that third well, we will drill an untested segment in Airfelden. So 3.8 million barrels in one segment, an additional 2.4 million barrels of what's called contingent resources, but we can translate those to reserves by that well test in that third well. But the cash that can be generated from the Airfelden from that one segment, it's in the region of $100 million over its 20-year life. So we've got the capacity to do what's appropriate with that money. We either reinvest it into the portfolio, make additional acquisitions, return it to shareholders, and that's really the position that we want to be in, where we've got capital, where we've got funds that were being generated, and we can make the best decisions on the basis of what's best for our shareholders to how we deploy that capital.
Do you see yourself going outside of Germany, or are you a company with a specialism within the region now, and that's it, it's going to stay?
Generally within the industry and also within the market, you are what you did last. So the last thing we did was we acquired Rhein Petroleum. One of the great things about the board that we've got is that we've got a broad experience in M&A and building businesses. So our CFO that came on board, he worked in M&A with Rothschilds for 12 years. Yeah. So he's got broad experience in M&A, as has our chairman and other board members. So we will look to grow within Germany organically, but we'll continue to look to grow inorganically through acquisitions in Germany and also potentially acquisitions elsewhere. So job one is to get this well done and get the production from this well, but then thereafter it's where's our next Rhein Petroleum? Where's the next thing that we're going to find to grow the company?
Well, good luck with that. Looks like you've got some news coming up. We're looking forward to that already.
Okay.
Larry, in the meantime, thanks indeed for joining us.
Thank you.
Larry Bottomley is the Chief Executive of the newly AIM-listed company Beacon Energy, which has come back to the market after that suspension in that reverse takeover. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.